This is Canagold's first opportunity to speak at the Metals Investors Forum, so definitely pleased to be here. I'm Scott Eldridge, CEO and Director of the company, and I think we're just going to do a very quick 2-minute corporate video before I kick off the presentation, please. Thank you. Our flagship asset, New Polaris, is located in our home province of British Columbia, one of the top mining jurisdictions in the world. New Polaris enjoys many benefits of being a past-producing mine, where this is a brownfield site that saw operations up until 1951. The old-timers were mining at a diluted grade of about 10 grams per ton, where they recovered about 250,000 ounces of gold during the historical production. Fast forward to today, we have a National Instrument 43-101 resource that is split about 50-50 between indicated and inferred, that is also at a diluted grade of 10 grams per ton. To put that grade into context, if this were a mine again today, it would be the 6th highest grade gold mine in Canada and the 11th highest grade gold mine in the world.
Drilling by Canagold in the late 90s led to the discovery of what we now know as the C West Main mineralisation. The mesothermal style of mineralisation at New Polaris is hosted in shear zones. It's more structurally related than, say, the intrusive related or epithermal deposits in the Golden Triangle. The high-grade veins we see at New Polaris actually have more analogy with areas like Red Lake Camp in northwestern Ontario in the Shield Rocks of Canada. The grade and the style of mineralisation of New Polaris makes it amenable to underground mining, which is a benefit working in this region of BC, where a small mining footprint has less of an impact on the environment. One of the key differences with New Polaris Gold Project is that the old-timers mined refractory ore and shipped a concentrate, whereas we propose to pour doré gold bars on site. Currently underway at New Polaris is the infill drill program. We have 2 drills operating 24 hours a day for the next 6 months in order to get this infill drill program completed during 2021. But we are very well resourced here, being so close to Atlan, and of course our next port of call being Whitehorse in Yukon means that we can fly out anything that we need within a day and keep going with the program. The purpose of the infill drill program now is to focus on the inferred blocks of the C West Main mineralisation and attempt to move as much as possible into the indicated category so that we can take the project to feasibility study level on the path to mine development. Early in the program, we've already seen some really interesting results from individual samples, 50 grams per tonne, 60 grams per tonne, and they will be really supportive of the model as we go forward.
This is an exciting time for the company as we continue to unlock shareholder value as we deliver and de-risk at New Polaris. Our ultimate goal is to see this become a high-grade gold mine again. Excellent, thank you. So that leaves me with about 6 minutes here. So I'll direct your attention to our standard cautionary note as I may be making some forward-looking statements. So let's just introduce the investor highlights here. So August 2020, we had a series of corporate level events that we collectively called the rebirth of the company, where we changed the name from CanArc to Canagold. We brought on a new director, a new VP exploration. We had a 5-for-1 share consolidation, and that helped facilitate an $8.4 million financing. And primary use of proceeds of that financing were to drill at New Polaris. And as you saw in the video, we're probably now about 3/4 of the way through a 24,000 meter drill program. So I'll spend our short time here today talking about New Polaris, which is our flagship asset. So a snapshot of our public company information: we have 3 listings: Big Board in Toronto here in Canada, the OTC-QB in the US, as well as the Frankfurt exchange over in Germany. 2 weeks ago, we actually just closed a flow-through financing where we raised $5 million at 50 cents with no warrant. So we now have about 82 million shares out. The 11.5 million warrants you can see there, those are associated with the financing that we did last summer. And we're currently trading at about 53 cents. With a recent news release, we're starting to see some volume and action in our stock, and I'll talk about some of those news releases. Just to start off with the management team, so my background, I've been in the industry for 12 years. Prior to metals and mining, I was in the insurance industry, so a lot of lessons learned there on the risk management side. I started off in the industry as a buy-side equity analyst. From there, I ran my own merchant banking firm, and I've now been on the issuer side of the business for the last 5 years. I've been CEO of this company for 3 years, and then I was invited in to take on the role by our founder and chairman, Brad Cook. That's a name that a lot of people in the room would recognize. Brad's a geologist. He's been in the business for 40 years. He's the founder and current executive chairman of Endeavour Silver. So I'm of a financial background, but I am surrounded by a very strong technical team led by our president and COO, Gary Biles, mining engineer, been in the business over 40 years. He's built and operated 4 mines, 3 of which were high-grade underground projects, the most notable on that list being Eskay Creek, where he was part of the build team and mining manager for Homestake before they were taken out. Knox Henderson recently joined us as our VP Corp Dev. That's a name that a lot of people do recognize with his past experience with Great Bear and Kodiak Copper, 2 very interesting discovery stories here in Canada. And our new VP Exploration that you saw in the video there, Troy Gill. He's Australian, spent 15 years with Rio Tinto with 2 discoveries behind his name. Just very quickly, our board of directors, Deepak Malhotra is a PhD metallurgist. Martin Burion is a chartered accountant, chartered business valuationist. Andrew Bowering is the director that joined us in August 2020. Another name a lot of people would recognize. His most recent success stories of taking private companies public include Prime Mining, American Lithium, as well as Millennial Lithium, and then Brad and myself on the board. So quickly on the asset side, we do hold a portfolio of gold projects under the category of exploration and development in BC as well as Nevada, but we do spend 100% of our time and attention on New Polaris. So as you saw from the video, New Polaris is a brownfield site, so it enjoys many benefits of being a past producer. There was production here during the 30s and 40s where they recovered about 250,000 ounces of gold in the form of a concentrate, mining underground but fairly close to surface at about 10 grams per ton. Fast forward to today, what do we have? 1 million ounces, NI 43-101. We've done a PEA on that at $1,500 gold, so needless to say, well below the current spot price. And the numbers are very, very robust. It's driven by the grade. I like to publish all the numbers after tax. The IRR hits 56%. The NPV is over $300 million with only $111 million capex. So we've got that 3-to-1 NPV to capex ratio and a very quick after-tax payback of less than 2 years. So let me give you a more accurate depiction of where we're located. So our management team, we're all based here in Vancouver. We mobilized the project in and out through Atlin, which is about 100 kilometers north of New Polaris. And from Atlin, we either use a small fixed-wing aircraft or a helicopter to access the site. So you saw from the video there, we have a fully staffed 20-person exploration camp, and we're currently running 2 drill rigs on the site right now. We own the property 100%. We own the mineral rights as well as the surface rights. And very high leverage geology. This is a mesothermal gold system, quite common to what you would see in the Red Lake Camp of Ontario. Our resources are split about 50-50 between indicated and inferred. And important to note here is the grade. The 10.8 gram per ton indicated and the 10.2 gram per ton inferred, those already have a 20% mining dilution rate factored in. So that represents head grade to the mill. So we'll chat a bit about the current drill program. It has 2 purposes. Number 1 is infill the inferred. We need to galvanize the inferred to move it up category to M&I, as we do have future plans to do a feasibility study next year. And then secondfold to the exploration program is we're seeing if we can find potentially new resources to make this bigger than 1 million ounces. So you saw Troy in the video. He's not really an excitable guy, but he does have a smile on his face here. He's holding a 50-gram, almost over a meter sample. And that's representative of a lot of the high-grade results that we've been getting from this current program. The program itself, again, 24,000 meters. We've got 2 rigs on site for a total of 47 holes. And everyone knows, but the assay labs are backed up here in BC and around the world. So even though we've drilled 3/4 of the meterage, we've only published just over 1/4 of the results. So to date, we've only published 17 drill holes. So keep an eye on our news flow. We'll continuously have more drill results every 2 or 3 weeks, moving well into February and March. We are short on time here, so I'm going to show you a cross-section of some of the initial results from this drill program. These were published on July 6th, and the red represents the new holes, the black represents previous drilling, the yellow is the C-West main vein, which is host to the 1 million ounces. And you can see here that we've been getting very robust results that are above the average grade of the resource, but just as important, they're actually above the average mining width on the deposit, which is 3 meters. This is a cross-section on some more recent results that we've published under the category of potential for resource expansion. So sitting about 100 meters parallel or on echelon to the C-West main vein is the blue vein here called the C10, where we've hit 17 grams over 8 meters. And just a few days ago, we published another result extending the C10 another 90 meters down dip where we hit about 11 grams over 18 meters. So we're fairly optimistic again that we can make this 1 million ounces bigger. This is a 2D shot of what the ore body looks like. The green represents the surface. The brown area where you can see the old stopes and underground mining infrastructure, that's where the mining activity took place in the 30s and 40s. And then the much larger yellow area represents the bulk of the million ounces. The blue area does not contain resources, but that's our interpretation of the down plunge potential extension of the project. And we've drilled 2 deeper holes as a part of this program. We just don't have the assay results back, but what we're trying to do is to see if we can extend the current maximum depth of the resource, which is currently only 600 meters, which is very shallow for a mesothermal system. And interestingly, from the current drill program, we've already had 2 holes where you can see about 6 meters over 25 grams that have made the top 5 list for the entire project. Why are we so optimistic that we can make this bigger than 1 million ounces? Well, we looked at analogous mesothermal deposits in the Red Lake camp, and the commonality you can see here is that they often extend for 1,000 to 2,000 meters below surface, and here we set it only 600 meters below surface. We love to boast and brag about our grade. Because we're a high-grade underground, our grade is significantly higher than the average. We're 7.5 times higher. So this is an interesting project. Although it's not large, we do have the highest quartile of the grade curve, but we're on the lowest quartile of the cost curve because our all-in sustaining cost from our PEA is only $530 an ounce. Lastly, I'll move to peer comp. Typical for this stage of development, you would look at enterprise value per resource ounce in the ground. So we trade at about $22. And our peers, as we see them, companies having projects in Canada or the US that are in a similar stage of development, they're more in that sort of $50 range. So for us to catch up to our peers, how are we going to do that? We have to deliver at the project level. Unfortunately, we've been experienced the backup at the labs, as have many other companies, but we definitely have steady news flow to come here to catch some ground on our peers. And I'll end it there.